Hi, it is another week, it is another topic, and today we are talking about credit repair. So if you saw the Power of Credit class, even if you didn't see the Power of Credit class, um, definitely go back and watch it because it's going to explain a lot more about credit than we are going to talk about here. Today, we're going to talk about how to fix your credit if maybe it needs a little bit of work. My name is Miria Gray. I am the Community Education Officer for Chelsea Groton Bank. You are not here to tell me what is one thing you want to walk away knowing about, but if you don't get something that you're looking for out of this class, if you think it's missing something, if you have questions, please feel free to reach out to me afterwards. My cell phone, I'm a good texter. I'm happy to answer an email or take a phone call. All right, so the first thing that you want to do is keep track of everything all in one place. So if you haven't done the budgeting class, you should definitely do the budgeting class. You want to get everything on paper. But a lot of us don't even know how much debt we're actually in, where we owe money to, and why our credit is so bad. So for the first two things, you'll definitely want to watch the budgeting class. You'll definitely want to watch the credit class. Those two things will help explain why maybe your credit isn't quite where it should be. And now we're going to talk about maybe how to fix it, right? So get everything in one place. You're going to want to track it in a journal, in an Excel sheet, in an app. There's a couple of different ones. However you want to set your budget up, the budgeting class explains like exactly how to get that done. And then you're going to want to set some goals, which we do also talk about in the budgeting class. You're going to want to set some SMART goals. They're specific, measurable, achievable, realistic, and time-based. For your purposes here, likely your first goal would be to pay down debt or repair your credit. Now, because a SMART goal needs to be more specific than that, you might want to say, I want to get to a 720 credit score by August of 2025. Be realistic about it, right? Don't say if you're in the 600s now, don't say that you're going to get to 850 in a month. That is likely not going to happen. So make sure that you're realistic with yourself. Give yourself a good amount of time to get that done, and then start working on it. Make sure it's measurable. Give yourself a deadline to work towards, but then make sure that that deadline is realistic. Make sure you can achieve it. So if you've done that budget and you need to do some reconfiguring to meet those deadlines, that's fine. If you need to make those deadlines longer in order to be able to do it, also fine. But getting that budget on paper and seeing how much you can realistically apply to these debts and to repair the credit is where you kind of need to be, and be very specific about it. All right. So a credit report. We do talk about this in the credit class. I go over very specifically what a credit report is, so I'm not going to do that too much here. But it's your detailed report of your credit history. They collect all of that information for other people to use. This is a very similar report to the one that I showed in the credit. What we're going to look at here is that collection agency account information and the credit account information. You're looking for maybe why things are the way they are. Do you owe any debts that are in collection? Do you see that something is on your credit account that you didn't know was there, or you aren't paying on, or maybe you missed a couple of payments, or whatever it is, right? Also, you're going to want to look at companies that requested your credit file. You want to check and make sure, if you don't know why your credit is not good, check to see and make sure that you agree with everything that's on this credit report. Make sure that nobody has stolen your identity. That is a great starting place. So again, you're going to want to go to annualcreditreport.com, or you can call 1-877-322-8228. You're going to get all three companies, Experian, TransUnion, and Equifax. Online, you'll be able to input your information. If you call on the phone, you're going to talk to somebody live. You are still going to have to give them some very specific information. They might actually even ask for more information on the phone that you might have to put in online. They are going to be grilling you. And so some of those really questions to prove it's you. So previous addresses you've lived at, accounts that you could be associated with, people that you might be associated with, phone numbers you might be associated with, and all of those things. They're all things that you should know. If there's something on there that they say is associated with you that you do not know, that would be definitely something to start looking into. All right, so again, I'm just going to briefly go through this because it was in our credit class. The FICO Fair Isaac Corporation, they are the ones that banks mostly use. So if you're looking for a home loan, a car loan, something like that, a personal loan, you're going to want to make sure that your FICO score is good. I break it down for you, explain all of these percentages. Please go watch the credit one if you have not. You are looking, for some reason, there's a white box in the middle of this. You are looking for your credit to debt ratio to be below 30%. So when you're looking at it, if you are extended $1,000 worth of credit, you want to be using $300 or less. Does that mean you can only use $300 on a $1,000 card? No. If you use it, you just have to work to get it paid down. You don't want to stay above the 30% for long periods of time. That will begin to affect your credit. Okay, so there's two ways to talk about paying down your debt. There's one that I prefer over the other, and then we'll talk about that in a second. The avalanche method is where you identify your highest interest credit cards. No matter what the balance is, you're going to be paying those off first. It saves you more money in the long run because you're not paying the higher interest rates, right? But you could be paying off your largest card first. You could be paying off something in the middle. You could be paying off something, that you aren't interested in paying off. So avalanche method is you're going to list all of your debts by order of interest rate. So if you have a Visa card with a 34% interest rate that has $1,000 on it, and you have a MasterCard with a 19% interest rate that has $6,000 on it, you're aiming for the higher interest one first, okay? Snowball method is where you choose the lowest balance credit cards or debts, and you focus all your effort on paying those off first while still paying the minimum on others. Once that is paid off, you work on the next one and the next one and the next one. The reason I like Snowball better than Avalanche is because most of us want an immediate kind of gratification, right? And so if you choose the Avalanche method, it might take you a really long time to pay off that first credit card. And so you're working at something and you're working at something and you're chipping away at it, and you might not be seeing results for quite some time. If you choose the Snowball method, if you have a card that's $250 and you can pay that off in 2 months, great, it's done, it's gone. You feel better about it, right? You've gotten one off your plate. So it could be done in a couple of months versus 6, 8 months or a year. So Avalanche is by percentage and Snowball is by dollar amount. Now, yes, you may end up paying more interest on that. So this is a personal choice for you, but in my opinion, most people feel better when they can start knocking some things off the list, right? So how do we rebuild our credit? So you're going to check your credit report, identifying and correcting any errors. You're going to file a dispute if necessary. You're going to negotiate payments with your creditors when you have some money to pay for them. Make sure that you're paying everything on time moving forward and don't skip any payments. Late is better, okay? So late, you may end up paying a late payment fee, but it won't hit your credit report that it's over 30 days late. If you can get it in under that 30-day window, so if it's 5 days late, 10 days late, that is so much better than skipping a month. Okay, so you might have to pay a fee and it might be more money than you were wanting to, but it won't affect your credit. It might affect your reputation with that particular borrower, but also so will not paying them at all that month. So you are much better paying them off, even if it's a couple of days late, or not even paying them off, but at least paying the minimum amount, even if it's a couple days late, than skipping a month. Okay. Now, when you're negotiating payments with your creditors, please don't do it unless you're going to be able to pay them. Because as soon as you start paying on a debt, it renews the timeline of the debt. So debt falls off, credit accounts fall off after 7 years. So if it hasn't been paid on and there's no activity on it for 7 years, it falls off. As soon as you start paying on it again, so say it's got 6 years on it and you start paying on it, you're back at year 1, which is fine. And it looks great if you're paying it. But if you stop paying it again, now you have another 7 years to wait until it comes off. So before you call your creditor, determine how much you owe everybody. Get that journal out, have pages for everybody, making sure to write your notes all in one place while you're calling your creditors, because you don't want to get off the phone with like random pieces of paper that you can't find later. And then you're going to take that back. Don't make any deals while you're on the phone. Talk to them, get some information. Don't make any deals. Determine how much you can pay each creditor. And then when you can realistically pay each creditor. Okay. So, if you don't want all the creditors to say, all right, great, we're going to bill you on the 1st, right? They want to see the money. So they will negotiate the day that you want that to be paid. So maybe make one on the 1st and one on the 15th and one on the 27th. Or if you've got two, don't make one on the 1st and one on the 27th, because those are going to be very close together, right? It does sound like they are far apart until the 27th you realize is very close to the 1st on the other side. Be prepared to explain your situation and any efforts you're making to pay them back. They may ask some questions, and let them know what your plan is for how you can realistically pay them, how much you could pay them a month, how many months you want to be paying them. Once you do call, take all of the notes in your journal, put a date at the top of the journal, put a time that you called, document the conversation, or write a letter or an email to the creditor. Ask the person you spoke to for their email address so that you can follow up with them with an email saying, this is what we talked about. Stay calm. Creditors have a tendency to be very aggressive. It does not do either one of you any good if you're shouting at each other. Somebody needs to stay calm. If you can stay calm, you can disarm them, because it's really hard to argue with somebody who's not arguing back with you, right? Ask about hardship programs. Many of them have them. Be honest with yourself and the creditor. If you cannot pay in a year, if they say, we'd like you to pay this in 3 months, Be honest. I can't pay that in 3 months. I just don't have $1,200 to send you. If I did, I probably wouldn't be in this situation, right? I want to pay it over 2 years. I want to pay it over 3 years, right? And do not accept any deal that you know that you might not be able to fulfill. You might be able to fulfill it 1 or 2 months. If you know that you're not going to be able to fulfill it for the length of the term, do not accept the deal. Okay, so you've got your budget, you're talking about credit, you've got plans made with creditors. You're going to want to readjust your budget and readjust that recovery plan every time something changes. When your income or expenses change, when you accomplish, adjust, or create a new financial goal. So say you pay off a card, that is going to take you back to the drawing board as far as what your goals are, because now one of those is off the table. You have more money to send to the next one. So be reevaluating all of the time, every month, looking at it. When you transition to a new life stage, have you gotten married? Have you had a baby? Are you getting ready to retire? What does this look like? Do I need to reevaluate my goals? When something unexpected happens, the first thing that you should do if something unexpected happens that will affect your finances is to review your spending plan and make changes, right? If we get hurt on the job and we are out on disability, what does that look like? What is our payment coming in? Is it equal to what we were making before? Is it less? Is it more? Like, what does this look like? So looking at that and making sure that we are changing things. If we've got more money coming in, we're changing things. If we have less money coming in, we are making sure that we are making adjustments and we're not just living status quo. All right. We do have an e-learning platform. I am so sorry. I'm very dry today. We do have an e-learning platform. It's chelseagroton.enrich.org. And it will take you to our personal finance platform. You can sign in. This COVID thing's not there anymore. You can sign up. You can create an account for yourself. It is 100% free. There's tons of tools in there. There's articles, there's short videos, there's mini courses, there's budgeting tools. It's a great way if you have a quick question about something to just put it in the search bar, do a quick search. The articles are very short, like a 3-minute read. They're not books. They're not over your head. They're nothing really technical. There are videos that you can watch if you don't like to read. It's all in there. The accounts are free. You just need to put in an email and create yourself a password. And we don't monitor any of those things. We monitor the number of accounts that are being used just because we do have a number that is given to us, but we're not really monitoring what people are doing. We may look to see, what people are reading about this month, but not like who's doing it or what they're doing. There is, when you sign up, it's going to take you through a process to like evaluate how you feel about money, what your goals are, and things like that. It will help guide you through the program so that it will suggest articles and things for you that meet your goals and other things. And you can choose to receive like emails when new things come out. I think that they might email once a month. That does not come from us. It comes from Enrich. And they send out like, here's what's hot this month, or, whatever, but it's like once a month. It's definitely not very frequent. Okay. So that is kind of it, as far as credit recovery. So the takeaways for this is Please don't do anything until you know exactly how much debt you have, until you know how much you can afford to pay towards your debt every month, until you are making sure that that works with your budget. Don't agree to anything unless you know that you can pay it. You do not want to kickstart something into another plan if you don't need to. The other thing is, if you pay off a credit card, so if you go back to our credit course, and one of the things is that matters in your FICO score is the length of your credit history. So say you have had a credit card since you were 18 years old. It's a Visa card. It has a very small balance, like $500. You pay it off. You're like, listen, I don't need this card. You're 36 now. You got another card when you were 35. It has a much higher balance on it. So you have this one that's $500 and you have one that's $10,000. So why do you need this $500 card? Please do not get rid of it. Because if you get rid of it and that falls off your credit history only is as long as the credit that's on there. So if you get rid of the one that is, 20 years long and now you only have 1 year, that is, you've just lost 20 years of credit history, especially if you were paying on it well. Because what sometimes happens is people pay off credit cards, they do not want to use them again, and so they close the accounts out. And that really does damage your credit. It takes your credit to debt ratio. You've gained some credit back and all of a sudden it's not available to you anymore. So you've basically gained it and then gotten rid of it. So if you were getting close to that 30%, and then you get rid of that one card, maybe you're back up to 80%. It's hard to say. So don't get rid of credit cards without looking at how that might affect your credit to debt ratio and how it might affect the length of your credit history. You don't have to use it. You can erase the numbers out of wherever, you can cut up the cards, but just don't close out the account, right? You don't have to use them. They don't have to be available to you, but don't close them out. Have one card that you use, and then that's usually more manageable than trying to manage like 10 cards. One card is usually much more manageable. Having 10 cards is fine, and then only maybe using one. The one thing you do have to watch is if you have communication from those cards that maybe it's been 2 years since you used it, and if you don't use it, they're going to close it out. Throw a tank of cash on there, and then when the bill comes, just pay it off, and then you'll be good for however long they give you until you have to do it again. So I hope this has been helpful. If you want more information about the snowball method, if you want more information about the avalanche method, please do not hesitate to reach out. If you want more information about anything or you had a question that maybe I didn't touch on, I am more than happy to answer that for you. Have a great day, and I will see you next week. Bye-bye.